What's up, you guys? Today we're going to talk about the investments I made in 2019 and how they are doing. Are they doing well? Are they doing poorly? And yeah, that's basically it. You can see that the portfolio here within Fidelity is around $331,654.77. It's up $229 today. Of course, for those of you guys that are familiar with the portfolio and the channel, this isn't all my investments, so I'll probably put a little bubble in the upper right hand corner with a picture of the total value of the portfolio. It's probably anywhere between $360,000 $370,000 to date, doing very well with respect to that. In the right hand side, you can see a 2-year history bubble of how the portfolio has performed over the past 2 years. This is including capital additions. This is not just me investing a lump sum of money and trying to see how it is doing. This is me adding $1,000, couple $1,000 every single month. But you can see over the past 2 years or so, I've almost doubled the account, and that is hopefully a trend that I would like to continue. Now, of course, this doesn't include things like computer shares or anything like that. But like I said, this is the majority of the account in the portfolio itself within here. Only about 10% of the portfolio is not within Fidelity. So hopefully I'm able to continue this trend in and outside of Fidelity. Now, looking specifically at year to date, started the year off with about $227,000. So just under $90,000 added to the Fidelity portion of the portfolio this year alone, which is pretty awesome. Now, actually going to the investments, my individual brokerage account that I've invested in this year. So specifically looking at the values within here, first and foremost, let's take a quick look at ABBV, which is AbbVie. Purchased 12 shares initially about a year or so ago, but we're focusing specifically on the 88 shares here that I purchased about 4 or 5 months ago for just under $70. We saw a decent dip just going into summer here for ABBV. So purchased those and up about 24% or so. If you were to take into account the dividend reinvestment as well as the 12 shares that I had purchased almost a year ago or so, it comes out to about 20% returns. So looking relatively well, put about $6,000 in, getting about $7,600 out. But like I said, mostly into this bad boy for the dividend. Now looking to the second investment here. BlackRock is another good company. So let's just take a quick stab at what this bad boy looks like. So I purchased this for 6 shares at the end of May of 2019, up about 15%. If you were to include those dividend reinvestments, just under 15% still. It's a relatively small position, only about $2,500 worth or so. But hoping to continue to grow it. I used to have this position, say back in 2015 timeframe, for about a third or half the price. So I'm pretty upset that I sold it in general. Would have liked to held on to it, but I only had, I want to say 2 or 3 shares, but it is what it is. Would have been able to follow the great dividend journey associated with BlackRock. For those of you guys that don't know, it's probably had anywhere between 10 to 20% dividend growth rate over the past couple of years, hoping that that continues. Pays around $13 or so a year in dividends per share. So hoping that trend continues into the $15, $16 range over the coming months. Now going to one of the companies that I haven't made too much money on, but still made a little bit of money. Let's check it out. It's Bryn Mawr Bank Corp. It is a local bank from where I grew up. And so family has been invested with this bank before, have given us loans, and saw it growing up, driving to and from my little regional area in Pennsylvania here. So wanted to give it a quick look. Purchased a decent amount starting in June timeframe, but the most recent I had bought is also in August. So have around 200 shares or so, just because I wanted to get a decent position in it. So I have around $7,500 worth, but you can see overall the entire position here is just under 7.5% growth. So not too great, but not too bad, and really purchasing it for the dividend growth as well as the fact that it's a regional bank, hoping that it might get acquired by a larger bank where the long-term dividend may be sustainable as well. But this thing has a pretty good dividend growth rate. It's got a track record since about the 1850s, 1860s. So wouldn't mind just to have the 200 shares in this company for an extended period of time. Every time I visit, they open another branch. So doing relatively well. They're continuing to grow the assets under management and really hoping to see this bad boy continue to expand over time. Now this leads me to another stock here called BPMP, and it's a midstream company. Both BP and Shell have midstream companies in the Gulf of Mexico. Not sure if any other companies do. That are publicly traded at least. But what I did, purchased around $7,000 worth, dropped in price. I think it IPO'd in the 20s or something, and pays a very decent distributable cash flow, and it continues to grow year over year. So figured I'd take a stab at it, see what it's like. Got about 500 shares worth, so I took a pretty big gamble on it. About 5 or 6 weeks ago, maybe even longer, within the past 6 months, this thing jumped up to about $16 or $17 a share. And so I was up almost 20% return within a couple weeks of purchasing this. But, like I said, I'm holding it for the long term and just letting the dividends go to the brokerage account. This is one of those companies where I'm not going to automatically reinvest the dividend because my energy stock is so over allocated at the moment. So it's about 30% in terms of income and 25 or so percent in terms of value, that I'm not interested in reinvesting. I'd rather take that money and invest it elsewhere. So good purchase at the moment. It pays a pretty decent dividend. I don't know how much it is in terms of how much it's paying me year over year, but probably on the order of $500, $600 a year. So that's really the reason for purchasing, be able to hopefully take that $500, $600 a year and purchase some other shares with it in other companies. So now this is probably one of the better investments I've had, which is not Chesapeake Energy. It is actually Caterpillar. Purchased this about just over a month ago, and you'll see when this bad boy pops up on the screen that I purchased 17 shares, and then a couple days before that purchased 21 shares. And so purchase price is evened out around the $120 range or so. And with that, I have about a $4,500 initiating position, which has now grown by almost $1,000 or 22% with just over a month. So if you were to annualize that, let's say multiply that by 10, you're looking almost a 200 to 250% annualized return. Can't complain with that, but the reason why I bought Caterpillar was the pretty phenomenal dividend growth rate. So let's continue to hopefully ride that trend for the long-term future. A lot of people invest in Caterpillar, people like Bill Gates and some other billionaires as well. So really hoping that this bad boy continues to spit out some pretty decent industry equipment, heavy-duty equipment, and I see it everywhere. I'm living in Trinidad and Tobago right now, and actually saw a huge Caterpillar backhoe tractor combination at the place I was at today. So they're absolutely everywhere. They're in China, they're in Trinidad, they're probably all over South America as well. Definitely one of the key companies in another company that I love to invest in, which is BHP. So I know they use massive trucks built by Caterpillar. So can't complain with these bad boys, and really good purchase price. Had I purchased about a month earlier, I might have been able to get it down to $110 a share, which would have been absolutely more phenomenal. But just happy to have a little bit of cushion built into the capital that I put in to Caterpillar, and really increase my yield on cost a little bit. So I think Johnson & Johnson was also one that I purchased this year. So let's give this a quick pop. So yeah, Johnson & Johnson purchased first starting in May timeframe. I purchased another couple shares about a month and a half ago. But yeah, this is relatively breaking even. Nothing too crazy here, so won't get too much into it. Purchase it for the dividends and hoping long-term dividend growth. That's basically it. Another one, I won't really click on this one because it's really just one investment with a dividend reinvestment here. But purchased this a couple months ago, Cosmos Energy. It's a oil and gas company, but what they specialize in is opening new plays. So for instance, they have a bunch of new stuff that they discovered off of West Africa, and they're also searching for stuff off of Northeast South America, kind of a little bit southeast of where Exxon just had a bunch of Guyana discoveries. So reason why this thing has gone up in the past couple weeks is because they had an oil discovery in Equatorial Guinea. Hopefully I'm not butchering that name, but holding on to this bad boy for the long term, either hoping it gets bought out and by a super major and continues to pay me decent dividends. But this, in the meantime, is continuing to grow their dividend and has decent free cash flows. So it's a very small company at the moment. I think it's less than $10 billion worth of an organization. And they're continuing to have pretty decent free cash flow. But yeah, in the meantime, just going to hold on to it. It's kind of one of my riskier plays that, you know, is really kind of 5 or 10% of the portfolio where I'm hoping to kind of grow it, but also has a dividend as well. I think it pays around 3% at the time that I purchased this. So maybe down to like 2.5% with the recent run up in price, but it is what it is. There is some Main Street Capital that I purchased this year. So let's do a quick look on that. So yeah, earlier in May this year, I purchased about 47 shares of Main Street Capital. It's up around 11%. Also, with that Main Street Capital position, there was a 3M purchase, and you can see that have some dividend reinvestment here, but overall, I think it was just about 47 shares or so. So overall, averaging out to just under 7%. Purchased this over the past, I want to say 3 or 4 months. So purchase this bad boy for the dividend. I have about $7,500 or so, and then I also have another $3,000 worth in my M1 Finance account, which was purchased relatively recently as well. So yeah, this might drag down the year average for the stocks that I purchased this year, but overall purchasing it for the dividend. So Ultra Group is relatively the same. I believe I've had some of these since 2018, but relatively bought some more shares in August timeframe, and not doing too great on them, but however still have a little bit of a capital gain here. Purchased them because I believe in the long-term free cash of the company and very low capex business with huge brand loyalty. So the fact that it's a free cash flow machine and is able to continue to pay dividends is, you know, the reason why I'm buying it. Not really too much care about whether the price goes up or down. I'm really just hoping that the dividend continues to grow through time like it has over the past 50, 60 years. And if it does, then I'm a happy camper, can't complain. And I think that does it for the individual brokerage account. If we go to Roth IRA, the only one that I have in here is my Main Street Capital. Opening this up really quick, and you can see that I purchased 150 shares or so when I finally got some of my money into my Roth IRA, just for under $5,900. You can see now that the entire value is worth just under $6,500 or so. So about a $600 or so, $700 or so increase within the year. So can't complain with that. But really purchase this for the dividend, not really purchasing it for any capital gains or so, but we're good enough for about 8 to 10% return just based off the dividend reinvestment. So yeah, not going to scoff at that. So I'd say probably on average looking anywhere between a 10 to 20% return. And like I said, I'm not buying these for total capital gains return, but rather just trying to buy them for long-term dividends and hoping to get a little bit of a cushion in there so I can purchase more shares. For example, this Main Street Capital position, had I bought it at its current price, I would technically own 8% less shares. So this 150 might be closer to 130 shares, or 135 shares rather, and I would be getting just that much less in dividends. I'd have 8% less dividends on a month-over-month basis. And so I'm just hoping when I purchase these shares, I'm buying them at lower prices. The amount of dividends you're getting paid is increasing drastically when you're able to somewhat get a little bit more timing into the time that you purchase them. I'm not saying I'm a timer or anything like that. I believe in time in the market is better than timing the market. but I believe that every individual position as a whole will have its ups and downs on any given month, week, as people flow in and out, whether funds or hedge funds flow in and out of a specific stock. And so what I'm trying to do is get the extra 5-10% so that I'm able to increase my income when I do finally purchase it by, say, 5 to 10%, because I'm able to acquire 5 to 10% more in shares if I were to have the same amount of money invested. As you can tell, this is a good example because I'm able to only invest in my Roth IRA once a year. And with this investment, I was able to invest another $6,000. And just because at this moment the price was, let's just say, the $39 or so, had it been $35, I would have been able to purchase, just another 10% more shares. But if it was at the current price it is now, which is like $42.50, I'd have 135 shares and I'd be able to only get 10% less in dividends per month. So it's a balance game. It's really trying to just continue to add money to the portfolio and add to things that you see a lot of value. Or if you're going the more simple route with an ETF, just continuing to add monthly to the portfolio in that same ETF. What I'd rather do is add to the portfolio, but kind of selectively choose stocks which I believe are down at that particular moment, be able to get another 5-10% dividend out of them. So hopefully that video finds you guys a little bit well. I'm going to do a little bit of editing, make sure that some of the private information in here gets blocked out here. But overall, about 10 to 20% return. Some of them were slightly negative, some of them all the way up to 25% or so, all within the year. If you were to annualize that, some of them would be over 200% returns. In the case of, say, Caterpillar, where I've only owned it just over a month and it's already returned close to 25%. So really hopes this video finds you guys well. Hope it finds you great. Hope you learned something. And if you haven't already, hit that like button, hit that subscribe button. Also hit that little bell. I try to make videos every couple days or so talking about my portfolio and sharing it with you guys so you guys can help learn and see someone that's been investing 5 or 6 years or so, so that you can either learn or try to make your own decisions and shaping your own investing strategy. So any other questions or comments, please leave them in the comment section down below, and I will see you guys in the next video. Cheers.